Hello, I am In-jung from the Department of American Cuisine. Today is April 28th, and let's start the American stock news. Today as well, I am In-jung, who is watching over the emotions of American stock investors without change. In-jung panel members, I don't know if you had a good weekend. Last week, the atmosphere in the United States stock market was really great, even just in the morning. So I want to quickly share my thoughts for In-jung panel members and subscribers who have been waiting for a while. It feels like I'm greeting you for the first time in a while with a relaxed mind. Anyway, when a good atmosphere lasts for a long time like this, I think it's good to start a new week with that energy. Last weekend, I shared a special broadcast with you. Mr. Kim In-jung, a representative of the Korean school in the United States, will be joining us for the first time in a while this morning. He shared some really great content with us again, but unfortunately, the number of views didn't come out as much as we expected. Maybe the video is too long, so it's not getting much attention. There is a lot of valuable information in it that many of you can benefit from for your investment activities. If you have time, I think it would be good to watch Kim In-jung's United States Stock Investment Education video again. After watching this video, some of our subscribers left very important questions, so I will briefly answer these questions and move on. There are people who use an app called Riz Mocharutra. Thank you to both of you in the comments, thank you. Mijunim, you said that choice stock was right this time, but even in the cable news network public opinion poll, the numbers came out. Why do you say that choice stock was right? I think the explanation is a bit unclear, so I'll try to explain it again more accurately. I've already answered this question for you. And then Mr. Kim In-jung also gave a similar answer, but you still seemed unsure and couldn't be completely confident, so I'll try to explain it one more time as simply as possible. This time the lowest adjustment was on April 8th. At that time it was the day when the most transactions were recorded, as the price dropped below 5,000 for the first time. Well, that's how it was. If you look here, you'll see that this was the first time the moving average line spread out like this, and that was on April 8th. Up until then, it wasn't in the fear stage, but rather in the anxiety stage. So, when it dropped to the fear stage for the first time, it was clearly marked. That's when it shifted to fear, and that's how you can see it here. By the way, what do you think about what Mr. Lee Jun said earlier? The fear and greed index was in the fear zone on April 8th. Is that what you were referring to? I'll check it once more to make sure. As you can see here, on April 8th it was in extreme fear, so that's why we showed a very cautious outlook. According to the contrarian investment method, Ma Su-shin's success can be seen by looking at the past. But there is one problem. If you look here at the fear and greed index, you can see that a lot of buy signals have occurred at very high points. For example, even up to December 19th, 2024, the extreme fear sentiment stayed up to 20, and that's not all. Looking at it in terms of the trend, when we entered the adjustment phase, if you look here, from February 25th, 2025, the fear and greed index already dropped to 24, showing extreme fear. So the sense of extreme fear was triggered very quickly. So if you start buying based only on cable news network's fear index, it's highly likely that you'll end up buying at a lower price or selling at a lower price. From February 25th, it continued to stay at the level of extreme fear. So, after that, it went up again for a while and then dropped again. But even the point where it dropped was still at the level of extreme fear from March 28th. The extreme fear persisted for an extended period, fluctuating over time, as evident in the chart. But the choice stock's maximum score is different. The market score did not fall into the fear stage even once until April 7th. So until then, we kept the signal to hold on to your stocks, and the first time it dropped into the fear stage was on April 8th. He pointed it out directly and accurately, as you can see from Mr. Kim In-jung's exact words here. When the market is cheap and falling, confirm the signal before gradually buying in, instead of buying aggressively right away. So until then, there was a tendency for it to stay low for a while. If you look here, you can see that Pierre and Ingrid were very active as official announcers. Initially, it was February 25th, 2025. Please verify your reservation on February 25th. On February 25th, the market index was 57. A score of 57 means that at that time, if you bought stocks, it was a bit too optimistic. This signal indicates the market score is too high to buy stocks currently. Because of this reason, when I adjusted it this time, I received a lot of trust regarding the market score of choice stock. That's why I brought this story up. Going forward, I started to think that instead of just timing the market, it would be better to rely a bit more on choice stock and make investment decisions that way. Thank you, Reason Muslim Ruknim, for your sincere question. I will now try to explain the difficult parts as clearly as possible. Now let's start today's Big Two News, which begins with a new week on April 28th. In this Monday broadcast, I will begin by recapping the previous week's United States stock market activity, as is customary. If you look at the S&P 500 index chart, you'll see that last week, the number of rising stocks steadily increased, while the number of falling stocks decreased. Next, let's take a look at the tech stocks that we pay close attention to. Overall, you'll notice that green is dominant, which means that there were significantly more stocks that went up than those that went down. The brighter the green, the stronger the upward momentum. There were a lot of stocks with this kind of strong performance, so that's how you can interpret this chart. In fact, last week, out of the 11 sectors that make up the S&P 500, except for just one sector, the remaining 10 sectors all recorded positive returns. There was one sector that was weak, and that was the consumer staples sector. The stocks we usually refer to as consumer staples were the only ones that fell, while all the others recorded positive growth. If you look at the ones that stood out the most, the tech stocks we favor rose sharply, with some going up as much as 8.09%. Second was consumer discretionary, which includes companies like Amazon with a 6.58% increase. Consumer goods already include Amazon and Tesla, which we love, and these two sectors led the market. That's how you should look at it. Third is communication services, which includes Meta and Google. So with Meta and Google both included, we achieved a good return of 4.6%. As you can see, mega tech companies are leading, with the three sectors of technology, consumer goods, and communication services dominating the market. That's the summary. So, the performance of the top 18 in the mid-on was also very good. Last week alone, there were items that rose by 56 to 63%. ProShares Ultra Bitcoin Exchange Traded Fund soared more than 25.6%, and in second place, Palantir did well, rising more than 20%. 19.25% in a week, taking third place, 18.06%, 16.24%, Innodata plus 15.2%, Broadcom plus 12.47%, and 10% in total. There were 94,910 cases of sharp increases. Next, Vista rose plus 9.7%, 2%, Amazon plus 9.4%, 9%, Nvidia plus 9.3%, 8%, Meta plus 9.13%, Taiwan, Semiconductor Manufacturing Company plus 8.80%, 8.3%, 1%, Alphabet plus 7.14%, Celestica plus 5.96%, and Talon Energy plus 3.98%. Lastly, Uber also rose 3.34%, so all 18 stocks showed a good upward trend. Now let's take a look at the performance of the Dow Jones during this week. Tesla hit its highest point in a row, rising sharply by 9.8% during the day, and then, after some trading, added another 2.2% for an additional upward trend. So today, I'll explain to you all why Tesla's stock price is doing so well. Last Friday, Tesla's stock price soared by nearly 10%, but there was a reason for that. A big event involving Hojai happened. Today on the broadcast, I'll explain why Tesla met with Hojai so you can understand. Tesla's stock price recently surged after the entire United States road network was opened up to more self-driving vehicles, which was a measure to allow more autonomous vehicles to enter the United States roads. This is also thanks to the support from the United States government, and this is very important. After Trump became president, there was a time when Tesla's stock price soared. Do you remember what the most important reason was back then? There are several main stocks in the United States. The Trump administration is expected to ease regulations on self-driving cars, making their era a reality. There was much anticipation, and now it's becoming a reality. That's how you should view it. This is Director Geopolitical. Chanda Pinde appeared. Chanda Pinde announced a new framework for self-driving cars on Thursday afternoon, saying it would ensure safety, innovation, and commercial deployment. The current administration understands well that it is caught between China and the United Kingdom economy and that its room to maneuver is very limited. Dobi Jiangguan said this in a press release. It's just too emotional. The reason is simple. We're currently competing with China in innovation, making it difficult for the Minister of Transportation to make a clear decision, hence the caution. So, in terms of self-driving, we're going to actively help industries move forward, and we'll continue to support them. This is how you can interpret it positively. This framework is a result of the Ministry of Transportation's regulatory innovation efforts. By improving unnecessary regulations and simplifying the national approval process, we can accelerate innovation while still making safety our top priority. There are two important keywords. The first is that we will ease regulations, and the second is that we will establish a single national standard. The President, Prime Minister, and other government officials are announcing plans to ease autonomous driving regulations, making positive statements about the technology. This is positive for Tesla, which has been working on autonomous driving tech. What about Elon Musk in April 2024? If someone says Tesla won't be able to solve autonomous driving, that person shouldn't be a Tesla shareholder. Tesla is betting big on the future, with autonomous driving being the most crucial part of that value. That's why the chief executive officer is making such a claim now. Tesla plans to start offering autonomous driving taxi services in Texas and Austin in June. At that time, they will start with Model Y, and then in 2026, they are expected to begin mass production of the Cybercab robotaxi. If these plans are carried out as scheduled, Tesla's stock price could continue to rise, and that's why expectations are growing. This news is also positive for Alphabet's subsidiary Waymo, which is already operating robotaxi services in San Francisco, Los Angeles, Phoenix, and Austin. They handle over 25,000 fully autonomous paid taxi rides weekly, marking a significant industry milestone. And later this year, they are expected to start their service in Atlanta as well. You can see that they are moving ahead quickly. Despite a vehicle shortage and high costs in places like Alpharetta, there is still high anticipation for Tesla. Why is this the case given these challenges? The autonomous driving technology being developed by Waymo and others is currently 20% to 25% more expensive than regular ride-hailing services due to high costs. Thus, mass adoption is expected to be much easier in the future, enabling this kind of understanding. Another advantage is that Elon Musk is also simplifying the program that was previously closed to the public. So what does the United States National Highway Traffic Safety Administration or National Highway Traffic Safety Administration say about this? The general order is to maintain reports on vehicles with advanced driver assistance systems, but they said they will no longer require regular reports. So regarding autonomous driving, several minor accidents also had to be reported, but now, until a request is made, there is no need to submit them anymore. That's how you can see it. Tesla's stock price rose more than 18% just this week, and it recorded the biggest weekly gain since the week of November 8, 2024, which was during the presidential election period. But the momentum has recovered rapidly, so you can see it like this. Tesla will announce its actual results on Tuesday. After Musk said he would spend more time on Tesla for the next few months, investors' expectations rose, and that's when the momentum started to recover. You can see it this way. As of April 26, 2025, let's check the momentum again before the market opens on Monday. Out of the 26 momentum indicators, only 4 are showing a buy signal, 10 are neutral, and 12 have turned to sell. And if we look at Tesla's 6-month stock price chart, you'll see that Tesla's stock price has formed a box range between $220 and $288 over the past 2 months. As shown, it was precisely $220. It hit the bottom at $220 once, twice, 3 times, and 4 times successfully, and the top was $288. Here it bounced once, twice, and 3 times. But near $288, there's the 200-day moving average of Tesla. So if Tesla's stock price breaks through the $288 resistance line and goes up this week, it means it's breaking through the area where it bounced once, twice, and 3 times before. Additionally, it's surpassing the 200-day moving average, a long-term trend indicator. Thus, the likelihood of a continued upward trend in the near future rises. It is possible to organize it as being at an important point of resistance. The following prepared article is special content that I wrote myself. If you look at the title, there are 5 reasons why many people say that the United States stock market has already hit bottom. Just by looking at the title, you can tell it's going to be very optimistic, and it's possible to make such predictions. Now, before I explain these positive points to everyone, let me read a comment that one of our subscribers left. This is a comment left by a member named In-jung. The comment was very straightforward and critical, and since you are actively participating as a subscriber, I would like to give a detailed explanation regarding your comment. Hello, I am a subscriber who always appreciates the membership and YouTube content. I have one question. For the past 3 weeks, the portfolio has remained unchanged. With positions in Meta and Amazon staying the same since April 3rd, I'm wondering why there have been no changes or new purchases. Are you currently holding cash in preparation for a possible further downturn? Despite the market's 4-day uptrend and positive sentiment, I'm curious why you're still keeping a 25% cash ratio instead of actively investing. Is there a specific reason? Thank you again for your kind and detailed answers, as well as for sharing useful YouTube and membership posts, even though you are busy with your work and hospital visits. I would like to express my gratitude once again. I also want to say a few words about this. Every month at the beginning of the month, I share the current status of my portfolio investments with the members. And as you can see here, as of April 1st, I disclose the details of each stock in my portfolio, including how much I have invested in each one. At the very end, you can even see the current balance. And according to the portfolio I shared on April 2nd last month, 93% of my total assets were held in cash. Here, there's a reason why I'm explaining this situation to everyone. I didn't think that 93% was too much cash. On the contrary, that's exactly what I intended. I'm always emphasizing to everyone the importance of cash in your portfolio, and ideally the amount of cash I want to maintain is about 20%. So my target cash ratio is 20%, but recently, because I sold a lot of stocks, I ended up accumulating cash and the ratio went up to 93%. But if it's 93%, that's about 80 million won? When I have that much money in cash, it makes me feel uneasy. Well, there are ways to find bear markets these days. There are several. The uncertainty about the Trimfer relationship is so great that it's not just my anxiety that makes me hesitant, but I've had a lot of these thoughts. But right now, Mr. Kim-jung is showing a very cautious and reserved attitude. After April 3rd, why didn't you buy more stocks even though you had cash and didn't feel the need to buy additionally? You asked this kind of question. If I were to give you the message I want to convey here right now, it would be, throw away your greed. If you have an extremely negative view of the United States stock market based on a promise, then you should keep 50% or even 60% of your assets in cash, not just 9%. So right now I am taking a neutral stance on the United States stock market. If the adjustment lasts only a short time, the United States stock market will recover within 4 months and return to its previous level. So this is not a bear market, but rather a correction. That's why the current decline is only about 9.3%. I am personally running a very aggressive portfolio, and I want to evaluate it myself. Even so, I don't feel anxious, and honestly, I don't know what will happen tomorrow. So, because I personally think I should always have at least some cash on hand, about 9 to 3% of my portfolio was held in cash. I would like to explain it this way. Mr. Kim-jung, I don't know how your tight financial situation will be resolved. Let me explain how this kind of background came about. In addition to that, I want to explain that the United States dollar already had the potential to become the direct currency, and there are a few reasons for this. Let me explain one of the most important factors. So what was the first sign that the United States stock market had already hit bottom? The G-Wag Breadth Trust Indicator is a recently rising indicator. This indicator is one of the indicators that captures changes in market trends, and this is how you can see it. If this indicator turns positive within 10 days with the number of stocks bought above 0.4 and the number of stocks bought above 0.615, it is considered to have switched to an uptrend. It means that Maisu Shinho is the one who intervened. That's the conclusion based on technical analysis. Therefore, in a downtrend, it is a typical rebound signal. This is what it looks like. And in fact, from 1978 until now, the Maisu Shinho signal has not appeared more than 10 times in the United States stock market. Therefore, it is a phenomenon that occurs very rarely. And when this Maisu Shinho signal appears, statistically, the United States stock market has risen, 1 month later, 6 months later, and 12 months later with a 100% probability. Now, from the first to the 10th time, it has occurred only 10 times. And then, if you look at the stock price trends, 1 month later, 6 months later, and 12 months later, it has risen with a 100% probability. The average rate of increase was significant during that period. Within 1 month, it was 3.7% after 6 months, 11.1%, and 22%, showing a remarkable upward trend. Now, on Thursday, April 24th, Lee Maysu's new ship, which is a dry bulk carrier, will be launched. This is the first time since November 2023 that a new dry bulk carrier by Lee Maysu is being launched again. We were able to directly confirm objective information. Now, the second one, there was a signal that the high chart spread's upward volatility exceeded 50%. Now, if you ask what this means, I've explained it several times on the broadcast. The likelihood of a recession rises as interest rates invert in the United States and other major nations. Small and medium-sized enterprises, commonly called the backbone, are crucial to the local economy. The gap between these two types of bonds is gradually widening. That's because when the economy gets worse, there's a higher chance that small businesses will face the worst situations like bankruptcy. Government bonds are considered very safe, with an extremely low chance of a country going bankrupt, so their interest rates don't increase much even during a recession. However, high-yield bonds have a much higher risk, causing their interest rates to rise significantly. That's because of the risk premium. Now, the difference in yields between high-yield bonds and government bonds has recovered to over 50%. This means that the yield on government bonds has started to decrease again. In other words, this indicates the market is less worried about a potential recession. That's how we can interpret it. And if a recession doesn't occur, based on the S&P 500 index, we still have a margin of up to 18%. Therefore, the possibility of this correction being immediate is very low. I've said this several times before, but unless there's an economic shock or a financial crisis, the likelihood of a bear market occurring is very low. But we've already experienced an adjustment of up to 18%, so if a recession doesn't happen, the possibility of this being the bottom is high. Currently, the gap between the United States stock market and government bonds has narrowed significantly. So in the market, this means there won't be a recession, and that's why expectations are rising, and such interpretations are possible. The third event is a situation where the market is volatile and interconnected, but let me explain what it is. We've seen an unprecedented market boom. On April 6th and April 22nd, there were 2 days within just 9 trading days when more than 89% of the stocks in the New York Stock Exchange rose. If there are about 100 stocks in the United States stock market, that means more than 89 out of 100 stocks went up. The fact that most stocks surged simultaneously like this has occurred twice recently, which is an extremely rare situation. This unusual phenomenon occurred 9 times between April 6th and April 20th. Let me explain. Isn't it unusual for 90% of the stocks in the market to rise like this, and for this kind of phenomenon to happen twice in just 9 trading days? Since 1979, this has only happened 3 times up until now, so it's a very rare phenomenon that has only occurred 3 times since 1979. After this signal appeared in the United States stock market, the probability of a rise in the following 3, 6, and 12 months is 100%. Except for just one time, it has always gone up without fail. That's how you should see it. The average increase is impressive. After 3 months, it was up 14.4%, after 6 months, 24%, and after 12 months, 49%. So the current situation where the market keeps going up like this is actually quite rare. 90% of stocks are rising, but in the past 9 instances, 2 were followed by a crash. Despite the current United States stock market surge, this rare situation doesn't guarantee future performance, which is important to consider. The fourth one is the dividend yield. The VIX soared to a very high level and then fell again. This part is also very positive. VIX. After it went over 50, if it drops back down to below 30 in a very rapid way, that's what happens. You can recognize it as a signal that the bottom has come. That's what technical experts say. Well, anyway, on Monday, April 28th, before the market opened, the fear index dropped to below 29. With the VIX dropping from above 60 to below 30, we can interpret this as a signal suggesting that the bottom may have already passed. That's one way to look at it. Now, the last signal occurred on a Friday. The S&P 500 recovered more than 50% of its decline. The United States stock market exceeded 5,500 on Friday, closing at 5,525. On February 18th, it peaked at 6,147 before falling to 4,835. So seeing such a huge drop, I was shocked. After dropping below 5,500 and 5,491 became the 50% mark. Now, it's rising again after breaking through this line. So, what this means is that recovering more than 50% from the drop is significant, and from a technical analysis perspective, such a recovery of over 50% can be interpreted as a technical rebound signal. 5,500 is a level that I've mentioned multiple times on my broadcast. The United States stock market has shown strong support at this level, rebounding twice from it. Currently, the support line is breaking and plummeting. When it recovers, that line turns into a resistance line. So, the strong resistance line for Hyundai is at 5,500. For now, it's above 5,500 and up to 5,525. But this time, the stock is very important. There is a very important event happening with this stock. The first is the release of the Core Personal Consumption Expenditures Index. So, we can see whether inflation is catching or not, as this is a key indicator that will be released. The second crucial element is the earnings announcements from megatech companies. Now, if the earnings results are announced positively this week, we could continue to maintain the level above 5,500. If that happens, we can be more confident that this rally is successful, and we can safely say that we can expect a new high. Well, that's the conclusion. When we looked at the United States stock market index directly through the chart, we were able to confirm once again that the United States stock market had already hit the bottom through the various events that occurred above. In addition to the 5 reasons I explained today, there are 2 more. The first is the extremely pessimistic results from the American Association of Individual Investors Sentiment Survey. And another one is that the market breadth had dropped to as low as 5 to 16%. The ratio of stocks trading above their 51-day moving average had previously fallen to a range of 5-16%. If we follow the historical investment strategy, we must either buy this type of signal immediately or at least understand it. That's the context of my statement. There are 7 indicators in total. By examining these indicators, we can confirm that we are currently in the middle of a rebound and an upward trend. Multiple indicators provide evidence supporting this conclusion. But the future is not guaranteed. This week, regarding President Trump's trial, we'll see what changes occur, and in addition, we'll see what results come from the earnings reports of Meta, Amazon and Apple, and also which countries Ukraine and Russia are aligning with. Right now, it looks like the war could end, but unless there's a clear agreement, the war won't end and will likely escalate. If this happens, we have to interpret it negatively. Therefore, it is impossible to completely rule out the possibility that the situation could suddenly deteriorate. We need to hope for a positive outcome and pay attention to positive news about the truce negotiations. The war must end, but there are still many uncertainties to keep in mind. And if these positive factors don't occur as promised, we can't completely rule out the possibility that the stock price could fall again. Let me say it again, but in the United States, the Federal Reserve is trying to stabilize and supplement the investment front by raising interest rates. And they are also considering the possibility of a soft landing for the market if interest rates are lowered. To add to that, in investing, not only are the results important, but the process of investing is also crucial. That's how I see it. When it comes to investing, the process can span 10 to 20 years, and we invest with a long-term perspective. However, even if the results are good, it doesn't mean much if the process is unhappy. That's my mindset. Therefore, in order for the process of investing to be happy, maintaining a healthy investment is the right direction for investing, in my opinion. That's how I see it. So right now, I have about 9% of my assets in cash. Investing all your cash in stocks just because you can't stand holding onto it out of anxiety is not the right approach. For example, even if the United States stock market drops further than I expected, I still have about 10% in cash, so I can use that to buy more stocks if the opportunity arises. That's why I don't give up on holding some cash. This way, I can explain it to everyone once again. Next, there is also some special content. This time, I plan to deliver information related to Bitcoin to everyone. Last Thursday, ARK Invest, which is operated by Tejas Yudeo, released its latest report on Bitcoin's future outlook and target price. I left the link here for you, and this is the report. The content is easy to copy, and there are several official charts included, so it's very informative. So for many people, it's not just a simple report to skim through. So today, through this broadcast, I'll summarize only the key points of this report and deliver them to everyone. Now, first of all, it's ARK Invest. In the report released last week, They presented the Bitcoin price outlook as a scenario with three different values by 2030. The first is the bear case, which is the most pessimistic scenario. At that time, it could drop to around $30,000, the lowest being $30,000. Right now, the price of Bitcoin hasn't even reached $100,000. It can go up about 3 times from here. That's how it's being talked about right now. The base case target is $71,000, and from the current level, it could go up more than 7 times. That's how it's being discussed right now. The third one is the bull case. It's the most optimistic scenario. At that time, it could go up to $1.5 million per coin. If that happens, from the current price, Bitcoin's price could rise at least 15 to 16 times. That's the outlook being presented. So in this article, I'll try to explain in detail how this target price was calculated. What is ARK Invest's model? Next, based on the official announcement, we set the target price for Bitcoin. Rather than speculation, this is a very simple official statement. If you look here, each individual source of funds has a different total addressable market. To calculate the market size, multiply the total market size by the penetration rate. For instance, if the market size is 100 and the penetration rate is 5%, the result is 5. And as you can see here, there are a total of 6 sources where capital can be raised. We multiply the penetration rate for each and add them together. And then, based on that, we calculate the expected supply of Bitcoin in 2030. The total size of the market is there, and if you divide it by the supply of Bitcoin, you get the price. So in this simple model, we present a price target like this. That's how you can look at it. So which markets exist and what are the sources of capital? This is crucial. There are 3 main areas of demand, and there are also additional areas that can be considered. But the most important area of demand is institutional investment. Institutions are now very eager to buy Bitcoin, and that's what they're saying. The second is digital gold. This means that many people, companies, and institutions now see Bitcoin as digital gold and want to hold it as a store of value. That's what they're saying. The third is the safe assets of new market investors, and there are also those who are still waiting to get in. For example, central banks are also holding Bitcoin strategically. The United States has limited ability to hold Bitcoin long-term, making it difficult to keep as a reserve asset. Companies are also starting to hold part of their cash reserves in Bitcoin instead of traditional assets, signaling a shift in financial practices. Lastly, as the overall financial services sector continues to grow, the need for Bitcoin will also increase. In this way, we are establishing the value of Bitcoin as a key asset. Let's calculate the expected contribution from each of these factors. So the first one is institutional investment. In the future, many institutions will start investing in Bitcoin, and there are various assumptions involved here. By 2030, the total size of the global portfolio of assets like stocks, bonds, and real estate is expected to reach $200 trillion. Here, cash is excluded. That's because cash is used for transactions. So the estimate is that there will be about $200 trillion in assets. Among them, the current allocation for cryptocurrencies in the base case is set at about 1%, and in the mid-range base case, it's set at 2 to 5%. And in the most optimistic scenario, it's assumed that 6 to 5% of the $200 trillion will flow into Bitcoin. That's the current outlook. Now, if you look here, it's the bear case and the base case. The current gold market share is 3.6%, but they've applied a more conservative estimate than this. Currently, gold makes up 3.6% of the total global assets, but it's unlikely to go higher than this. They estimated it would be around 2.5%. That's the assumption they made. This is based on the scenario where Bitcoin reaches its highest potential. More people are likely to invest in Bitcoin than in gold, and Bitcoin could potentially take up to 6.5%. That's how they're looking at it. The second one is digital gold. If you look at the size of the total addressable market, as of 2024, the total value of gold is about $18 trillion. But if you look at the yield here, currently, out of the total market value of gold, it's expected that about 20% could be possible in the bear case, while the base case is 40%. But if you look at it this way, it means that it can't reach half of gold's total market value. That's the logic behind this estimate. The third point is that Bitcoin will receive attention as a safe haven asset in the new market. That will be in 2030. If we look at China's total money supply, called M2, the scale of M2 could reach about $68 trillion. If even just about 0.5% of that is invested in Bitcoin, then in that case, the basic case, is that it could go up by about 25%, then scenario at the highest level. If interest in virtual assets increases rapidly and more people invest in Bitcoin, it could go up to as much as 6%. This is how it looks right now. The entry barrier is low. With accessible internet, Bitcoin could potentially surpass gold as a more appealing investment option in the future. That's the argument being presented. Next, each country's central bank is expected to hold Bitcoin as a reserve asset. That's the kind of prediction being made. Total addressable market refers to the projected global foreign currency reserves of around $15 trillion by 2030. Gold has always been kept as a reserve asset. Among the $15 trillion, Armado Bear's share is 0.5%, while Base's is 2.5%. So each country's central bank holding about 2.5% in Bitcoin is a reasonable expectation. That's what they're aiming for. And if you look at the bull case, up to 7% of all foreign reserves could potentially be held in Bitcoin based on current projections. Several people like El Salvador and Bhutan have already started holding Bitcoin as reserves. By 2025, the United States is anticipated to earnestly contemplate holding Bitcoin as a reserve. And if the United States government starts holding Bitcoin as promised, then many other governments around the world are likely to follow suit. So in my view, this scenario is not just possible, but even likely. Next up is corporate treasury holdings. Total addressable market is projected to be about $7 trillion by 2030, which includes the cash held by global corporations and the accumulation of cash-like assets. Out of that $7 trillion, how much of it is actually being held in Bitcoin? That's the question. If you look at the current allocation, bear cases are at 1%, base cases are at 2 to 5%, and in bullish cases, it could go up to even 10%. So the mid-range is the most important right now. In July, the 2 to 5% means companies are holding a bit of Bitcoin. This scenario is possible. And if you look at the scenario for the highest case, it's expected to be around 10%. This means that a lot of companies are following the strategy, and that's what's implied here. By the end of 2024, it is expected that about 74 companies in the top industries will hold about $55 billion worth of Bitcoin. So, depending on how many more companies start investing in Bitcoin in the future, this number could change. That's how you should look at it. Lastly, the 10th one is an on-chain financial service. It's about building the infrastructure for financial services using blockchain, and the total addressable market is estimated to be up to $350 billion. It's like DeFi. If you look at the second column here, you can see the expected compound annual growth rate and average annual growth rate for the next 6 years. In the worst case, it's expected to grow about 20% per year. The base case expects about 40% growth. And in the best scenario, it's around 60%. The size of this market is what makes ARK Invest's forecast possible. You can expect a certain part here as well, and if you look at it this way, you'll see. Let's break down the meaning of Han Madiro Mamuri. I've explained this several times to various people on my broadcast as well. Personally, I have a very positive understanding of An Ho Hua Huan, and I have unwavering trust in him. So I don't invest in Bitcoin passionately, and that's the only reason. It's because of the laws of supply and demand. Many people know this well and have a sense of it, so the possibility of supply increasing significantly later is almost non-existent. And so, if supply is limited like this, the only thing that can change in the future is demand. Therefore, the law of supply and demand will determine the price. So, if demand for Bitcoin continues to increase steadily, there is no doubt that the price of Bitcoin will rise. So, based on the white paper of Satoshi Nakamoto that we just read together, I will explain the 6 main reasons why demand for Bitcoin can continue to increase in the future. It predicts the potential demand, the size of the market, and the expected penetration rate, and estimates the potential size of demand that could be added to each market in the future. So, from an investor's perspective, while it may seem that the recent sharp rise in Bitcoin prices is excessive, this report personally judges that there is a different meaning behind it. The next article to be prepared is news related to Ukraine and Russia that was reported just this morning. Recently, we have 2 topics that we are keeping an eye on. The first is the Trump trial, and the second is the ongoing Putin regime. But there is also a third positive factor possible, and that is the end of the Ukraine war. So through this article, there is speculation spreading that Zelensky has made a secret deal with Trump. And so, if the war is really over, what kind of benefits can we expect, and what positive effects will there be on the stock market? I'll organize my personal opinions and deliver them to you together. This news is brought to you by Midjan Artificial Intelligence, which delivers my voice. I think you'll enjoy listening together. Ukrainian President Volodymyr Zelensky expresses his hope for a ceasefire and a sustainable peace behind the truce and separate talks. However, Trump questioned whether Vladimir Putin really wants to end the war through honest negotiations. Trump and Zelensky held a one-on-one meeting for about 15 minutes in a conference room at the Four Seasons Hotel in Tokyo. This showed Trump's strong will to maintain a ceasefire until April 30th, which marks the 100th day of his second term. Critics point out that this agreement could result in Russia gaining territory. We have endured many things alone. We look forward to seeing results from all the discussions. John Sunsky was also at the X9 Twitter. It was a very constructive meeting, and if we achieve the results we agreed upon, it will be a historic moment. Bayek Akwan evaluated this meeting as productive, but Team Prune posted an article criticizing the outcome on the social media platform Dolao. He said that the Russian president does not seem to want to stop his aggression, and suggested that additional sanctions may be necessary. Recently, there has been no evidence of criminal intent in the border area. Trump is coming back to the United States like this, and it seems that he does not want to give up his former position. While keeping me in check, it is necessary to discuss financial sanctions or a second round of sanctions. Too many people are dying, said Trump. Solyul and Zelensky met in person for the first time since briefly meeting at the Open Office in February. According to the participants, they discussed the fundamental characteristics of the war, defense, and peace process. Zelensky met with French President Emmanuel Macron in Rome and is also scheduled to meet with European Commission President Ursula von der Leyen and Ukrainian Foreign Minister Dmytro Kuleba. At the funeral of Francis, representatives from dozens of countries attended, and many of them met with United States leaders for the first time since taking office in January. Zelensky's surprise visit comes after Russia's large-scale attack on Kyiv and other eastern cities in Ukraine. The attack that occurred on Thursday was Russia's largest offensive this year, killing at least 12 people. As a result, Ukrainian President Zelensky urgently requested a visit to the Vatican. Special Envoy Steve Witkoff of the Trump team is attending the second round of talks with Putin in Moscow on Friday. On the same day, Zelensky acknowledged the difficulty of regaining Crimea and expressed his intention to seek support from Trump. His security plan excludes United States arms, intelligence sharing, and air defense support. Bloomberg reported that Volodymyr Zelensky's proposal acknowledges Russia's annexation of Crimea in 2014 and effectively accepts the current front lines as they are. This proposal also means that Ukraine would have to give up its goal of joining NATO. Timothy said that there are a lot of security forces on both sides of the border on Thursday. He says he wants a deal. He said it would be good to know the outcome, but Russia is still refusing to withdraw its troops and is blocking the entire front line, so it's hard to say that a deal is imminent. Moskva-Ban thought that just a few weeks before the invasion in February 2022, the government would be restored, but that expectation was shattered by the prolonged war. This is because of Ukraine's strong resistance in the region. Currently, Russia occupies about 20% of Ukraine's territory, including Crimea, but has not been able to make significant progress over the past 2 years. Despite repeated attacks, the situation on the front lines in Crimea and eastern regions has barely changed in 2024, with only about 1% of territory changing hands. Han Madi from Washington reports that expectations are rising once more regarding the outcome of the Russia-Ukraine war. This is one of the reasons why the United States cannot easily withdraw its support. If the war between Ukraine and Russia ends in the near future, it is expected to have a positive impact on the United States economy and stock market. The recent global energy price instability is mainly due to disruptions in the supply of energy, especially Russian oil and natural gas, which has led to a sharp rise in prices. The end of the war will reduce uncertainty in energy supply, and the normalization of Russian energy exports will make it possible for oil and natural gas prices to stabilize at lower levels. This can also help ease inflationary pressures. Stabilizing energy prices in the stock market can ease inflation concerns and increase the chance of a soft landing for the global economy. This can create a constructive environment for both growth stocks and value stocks. Lower energy costs can boost profitability for energy-intensive industries like aviation, transportation, and manufacturing, potentially benefiting related stocks. Food price instability in Ukraine and Russia is a global supply issue. Due to the war, Ukraine's agricultural production and exports have been greatly disrupted, which has been a major cause of rising food prices around the world. If the war drags on, it will be difficult to normalize grain exports, which could keep global grain prices unstable. This could further accelerate inflation in the United States by driving up domestic food prices. Unstable food prices in the stock market can cause consumer anxiety, which can lead to a decline in consumption and negatively affect industries related to sales and consumer goods. Reducing policy uncertainty and improving investor sentiment are key factors for the global economy. If these are addressed, it can stabilize both businesses and consumers, which may lead to increased investment and consumer spending. Reducing geopolitical risks in the stock market can reduce market volatility and lower investors' risk aversion. This generally has a positive effect on the stock market overall, stabilizing safe assets like gold, the dollar, and United States government bonds, while improving the outlook for risky assets such as stocks and Bitcoin, making capital flows more active. Expectations for economic growth in Guruben, along with the direct impact of rising asset prices on the real economy, could accelerate the pace of economic recovery. This could also have a positive ripple effect on the United States economy through the Guruben region's asset market. The value of United States companies' exports could increase. According to the International Monetary Fund and Organization for Economic Cooperation and Development, the end of the war between Ukraine and Russia is expected to raise the global gross domestic product growth rate by 0.2 to 0.5 percentage points. The anticipation of a worldwide economic rebound in the stock market may positively impact the stock values of United States firms and multinational companies that are central to exports. The content prepared for today marks the closing of today's United States stock market. In today's video, I personally prepared the video of Jin Munseo, the most trusted expert in the United States stock market, for you to watch in the morning. Earlier, I briefly explained the reason why the stock prices of Tesla and other stocks fell last Friday. Personally, I think this news can be seen as positive not only from a long-term perspective, but also in terms of capital raising and robot taxi-related aspects. Through this news, I will also share my thoughts on how investors are thinking about autonomous driving and robot taxis in the future. That's all for today's broadcast. Thank you to everyone who stayed with us until the end, and I sincerely appreciate your support. Today's broadcast was a bit long, but tomorrow we'll come back with more compact content so that more people can tune in comfortably. Let's keep fighting together until the day we all retire from investing in United States stocks. Have a happy day. Thank you.
Welcome to the Fresh Point. Today's main dish is lobster. This week, we focused on robot taxis. Waymo's announcement was very important. Today, I'll briefly summarize the current situation and the long-term impact this will have on the industry. First, I'll briefly go over the key points. In 2024, the total number of rides through Uber and Lyft in the United States is expected to reach about 4 billion. With an annual growth rate of about 5%, it's expected to slightly exceed 4 billion rides by 2025. The total sales from ride-hailing amount to about $21 billion. So currently in the United States, the total addressable market size is estimated to be about $85 billion. And based on this total addressable market, investors are curious about how much value they should assign. If we consider this growth rate and asset turnover, and value the company based on revenue, we can imagine that a sales multiple of about 15 times could be applied. So, even just in the United States ride-sharing market, investors could expect to realize about $1.4 trillion in value. Looking at this market fundamentally, the two companies, Waymo and last year's round of investment in Baidu, are considered to be the leading players in the ongoing competition for industry value. In the case of Tesla, it's not clear how much investors are valuing the robotaxi market, but the total market capitalization is estimated to be around $900 billion. Adding these two together, it appears that Tesla's robotaxi business accounts for approximately $100 billion to $200 billion of the company's current value. If you combine them, it could be around $250 billion. So, the adjusted value right now is a bit different. That's why I think labor costs are an important factor. This market is quiet, but in reality, there is a huge opportunity. That's right. It's not easy for companies to fundamentally become profitable, so the market itself is clearly still alive. This summarizes the situation. Next, I'll explain why the announcement and rumors about Baekhyakwan are considered the key points. I'll start with the news from the White House. The head of the Ministry of Transportation made a statement following this week's earnings announcement. This administration understands that we are competing with China for technological and economic leadership, and that competition is fiercer than ever. And then he said this: as a result of the Ministry of Transportation's efforts, we have improved regulations, strengthened national standards, promoted innovation, and made safety our top priority, establishing a framework for the future. Here are a few key points I would like to emphasize. The first is regulatory reform. Currently, regulations are mainly focused on the number of accident occurrences, methods of responding to accidents, and related reporting standards and reporting frequency. For autonomous driving vehicles, especially Tesla's full self-driving or Waymo's self-driving cars, even a minor accident can lead to intense scrutiny and regulation. And the regulations related to that are quite complicated and strict. The South Korean government wants to ease and improve these complicated regulations for industries like Waymo and Tesla. Also, some parts will be prioritized for safety. However, the guidelines for safety are still somewhat vague. That's because the criteria for safety are often evaluated without clear and objective standards. For example, humans are considered distracted drivers when they're not focused, but it's even harder for people to drive while distracted. In conclusion, autonomous vehicles remain dangerous. In the United States, about 40,000 people die in traffic accidents every year. It's a sad statistic, but it highlights the seriousness of the current situation. Rather than asking whether robot cars are perfect, we should evaluate them as we do human drivers. When I hear that safety is the top priority in this case as well, I expect this perspective to be reflected. From a broad perspective, the remarks made by Baekhyakwan this time can be interpreted as a positive signal for both Waymo and Tesla. And if you look at this week's updates in detail, I think the most intriguing part of Google's actual announcement was the information related to Waymo. Currently, Google says that Waymo's paid ride-hailing service is approaching 200,000 rides per week. This is a significant increase compared to 150,000 rides per week 3 months ago and 100,000 rides per week 6 months ago. If you think about the fact that just last May, it was around 50,000 rides per week, that's a threefold increase in just 1 year. Also, Waymo is expanding its services to other cities, and this part has also been strengthened in this update. The new cities that Waymo is adding are Atlanta and Washington, District of Columbia. And at the actual Google announcement call, Mark Mahoney asked a very good question. The question was about how monetization plans are going. Sundar Pichai said that this is the first time that questions about Waymo have come up in an actual call. However, through this, investors may start to recognize that Waymo is now becoming an important part of Google's story. Sundar responded that he is satisfied with the current partnership with Uber regarding this. This part was a bit unexpected, but personally, I think Google will eventually leave Uber and go independent. Sundar said he is still satisfied with the partnership with Uber and added that they are also exploring a model where consumers buy cars separately and register them on Waymo network. This is the method Tesla proposed and adopted. This part was left ambiguous, and Google received criticism that it is interpreting this opportunity in its own way. Investors are also recognizing the potential of this market, and ultimately, they expect that Waymo will grow separately. Last November, Joa Dongryun created materials analyzing whether Waymo could add meaning to Google. At that time, Joey estimated that Waymo could add about $300 billion in value to Google's business. This is a conservative estimate, lower than Waymo's last investment round valuation. Now I'll move on to the Tesla story. Tesla announced that it plans to begin its free robotaxi service in Austin, Texas, as early as June. However, there are some concerns about whether the service can actually start in June. But initially, it is expected to start with a small scale, with only about 10 to 20 vehicles. There is still a lot of speculation about who will be able to ride in the initial vehicles. If we think about safety, it is said that people are likely to be on board in the initial phase. Some people may feel reassured seeing someone on board, but I personally don't think that's necessarily true. As for people who are using the vehicle for the first time, I think it's natural to have someone on board for safety reasons. Personally, I think this year, Tesla's robotaxi service will progress very quickly. It looks like only a small number of vehicles will participate in the ride-hailing service at first, but it will gradually expand in the future. Now, let's briefly compare Waymo and Tesla's models. From a long-term perspective, I think Tesla has a big advantage in terms of vehicle cost. Waymo's vehicles are known to cost about $100,000, and in this aspect, Tesla is more advantageous. Tesla's vehicles are expected to cost about $30,000 each, which means they can put a lot more vehicles on the market quickly. One more thing I want to emphasize about Tesla and robotaxi is that the recent brand image damage caused by vehicle defects can also have a significant impact on robotaxi. However, this year, due to the very limited number of vehicles, the impact is not expected to be significant. But the important point is that people's interest in buying Tesla vehicles has actually decreased by about 15% compared to last year. This perception can also affect the use of Tesla's ride-hailing service. As time goes by, after about a year, the brand image will fade and consumers will eventually choose the ride that is cheaper and more convenient to use. Tesla is expected to maintain an advantageous position in this situation. This time, the news about Baek Agwan was positive for both Tesla and Waymo. Investors have also begun to pay attention to robot taxis, and they are looking forward to how quickly this market will grow in the coming months. That's all for today.